Hey, everybody, this is David Paul, the host of the Capital Stack podcast, where we talk to founders, entrepreneurs, and investors about all things value creation in startups. Today, I am speaking to Maan Hamdan, the global managing director of Hexa Global Ventures. Previously, he was an operator for some great HR tech companies, one of them being HRsmart, which was acquired by Deltek. Also, TrenData, which he sold to iSolved. Maan, how you doing today?
Doing great. Thank you, David.
Are you in hot sticky Dallas today?
Well, today actually we have great weather. We got a storm yesterday and brought the temperatures from the 110 to 88, and today it's the highest 90. So we're enjoying it.
That's not bad. That's not bad at all. I'm in San Diego. It's a little bit better than that, but you got to pay for that.
I won't hold it against you. All the California people are
Mon,
coming
so
to
you
Texas.
Yeah, that's true. That's true. I just stay here for the summer. I'm in Phoenix 9 months out of the year, but I can't afford to live in San Diego. I need to live like a king, Mon, with my expensive lifestyle. So I live in a cow town like Phoenix.
Nice. I'm putting my
So
headsets on, see if that's better. But are you hearing me well, or do I need to make a change?
I hear you great.
Okay,
I hear you
perfect,
great.
perfect. Okay.
So Mon, tell me, you have had the great experience of being a multi-exited founder and now investor. Let's start. Let's go back. Let's start with kind of your experience building and starting. Basically HR tech companies, and your background, of course, and then we'll jump into Hexa Global Ventures, which is super interesting.
Thank you, thank you. A little bit about my background. I started my career as an electrical engineer and um, overseas. I'm originally from Lebanon, so I studied in electrical engineering and ended up working in the Gulf for 5 years before I saw the light. And the light I saw is that I'm not the engineer type that will work with machinery in a closed room by myself. I wanted to be around people. So I came back to UT Austin, got my MBA, and went still in engineering, but went into telecom and went to the product management route and then later marketing and sales. Spent a few years in telecom, uh, grew to become an executive with companies. But the more I succeeded there, the more I realized I enjoy more starting companies and growing companies from when they're small. I did not enjoy being in a large corporation and being one of many that had only a small impact on the big picture. I wanted to have bigger impact. So in 94, I became an entrepreneur, started my first company, which was my first semi failure, if you want, because it did not go where I needed it to go. It was called CareerNet, and it was supposed to become a job board like Monster.com. But in '94, the market was too early for job boards, and I didn't have enough money, so I couldn't take the company where it needed to. So I went on and started my second company, which was a paging company in Latin America. That did fairly well. And in '99, I started HRsmart, which was my third company, and that grew to become itself 10 companies globally, and I exited in 2015. So over the years, I feel responsible for starting many companies. Most of them succeeded, but I had a couple failures along the way.
So what was HR Smart? What was the value proposition there? What problem were you solving?
Well, we started with initially when we started with a recruiting solution. We actually at the time we didn't know that one day it would be called applicant tracking. We were one of the first in the industry to build an applicant tracking solution. Um, Evolved from there to add performance management, then learning management, and succession planning, career planning, and so on. By the time I sold the company, we had 9 HR technology or talent management solutions that all operated as on a single database as a unified uh, application, but clients only used what they needed. So they could turn off everything and just use learning management, or they can use two solutions or five, and so on. And grew that, like I mentioned, globally. By the time we sold the company, we had it in 12 languages in 30 countries around the world.
Wow. And so what made you want to start with applicant tracking systems and recruiting? Like, what was the genesis of that from being an electrical engineer?
Well, it all started in my last job in telecom. In 93, I was the chief sales and marketing officer for a company called PageNet. And at the time, PageNet was the largest global provider of pagers. And in my job there, I was spending literally in the seven figures money on recruiting for sales and support people. Um, so when I decided to become an entrepreneur, the idea came to me to create a job board that allowed people to put their profile online and allowed the company, CareerNet in this case, to have a database that somebody would have access and they would search for the right candidate without needing a recruiter. That was kind of the idea. And as I mentioned, CareerNet, after a year, didn't work well, didn't bring enough revenues to support itself. And I haven't raised money at the time. So I had to sell it. Now, sold the IP, the intellectual property, to a company out of Michigan who took it, and they were supposed to essentially make it happen themselves. The sale for them was mostly equity. So we became owner in their company, and we continued to check on them. So fast forward to 1998, we went to Michigan to check on this investment we made in this company, and we found out that they weren't using the technology as much. They had advanced it a little bit, but they weren't using it that much. So we reacquired CareerNet from them, and now we had a technology for essentially job matching. Went and spoke to a lot of clients at the time and said, okay, we have this technology. By then, Monster and Career Builder were in business, so we were kind of late to the job board market. So what did we do? What do we do with that technology? Consulted with few clients, and everyone said, create a job board for us, internal job boards for our company, where
Interesting.
applicants can come and apply, and we track the hiring process. So we use that job board technology and built an applicant tracking from it. That's how I got into it. In fact, every business I started in my career has been a reaction to a market need versus me thinking that I know it all and starting something.
Yeah, it's good. It's good to have market pull before you
Yes,
start building stuff around it. You know,
exactly.
it's super interesting. So if I'm hearing you correctly, you were out, you were working, you were spending a ton of money for recruiters. No one wants to pay the recruiter, but you know, it's a quick way to to get people. They're
Yeah,
not really functionally doing anything different than you would be doing. They're going to the same people and advertising jobs, and they're just screening them for you. It's not like they have a
correct.
proprietary list of people, right? And so you built this tool internally. The tool or the company didn't work out, so you sold the tool. And since then, this was late '90s, so the .com boom was happening, and people started to want eyeballs. So they started building the job board, which wasn't super technologically interesting, but the internet was interesting. Web 2 was interesting, and
Yes,
people wanted to be on platforms.
yes.
And so the idea of saying, like, let's actually use a platform to advertise our jobs became interesting. However, you were also competing for the same eyeballs as everybody else.
Correct, correct.
And so you said, why don't we do this internally? Enterprise can do this internally. So you made the first job board or applicant tracking system for the enterprise.
Correct. Like one of our first clients was a company that we all know very well, and we love their product, Hershey's, the chocolate company, and global company, a lot of employees, and their recruiting process at the time, you can imagine, Every office had their own recruiters and their own processes. We just built a one system that automated the whole thing for them globally, and they loved it. And they started telling others about it. And before we know it, we had Sprint as a client, we had major banks as clients, and we were essentially one of the uh, segment creators at the time, because like I mentioned, when we started, the word applicant tracking had not been invented yet. It's one of those we coined along the way.
Yeah, no, absolutely. And since you were collecting the data up front, it really made sense to continue to build modules. It became kind
That's
of
right.
easier at that point to continue to build software and value.
Yes, because the human resources executives at the time that saw the impact that our solution had on the recruiting process, they were still dealing with this disparate process of performance management. They were doing all training manually. They didn't have any system, so they will come to us and say, "Well, could you do the same thing for us for our performance?" And um, being an entrepreneur, we could never say no. No, no, we are an applicant tracking company, so we would
Yeah.
get a new team and we'll start working on a performance management. And but we did it in a way that is till today. Actually, yesterday, I had a meeting with somebody that used to be our partner in Canada, and he tells me till today we had a vision chart that was the shape of a football, and they call it the football, but and it had all the solutions on it in a way that I envisioned it, and it's something that I prepared back in the early 2000s. And actually, this gentleman just told me, he's a consultant now. He said, I still use it today. It's
Hmm.
because it does put the whole talent management process in one chart, so people can understand what is involved from when you onboard a client to when you offboard them at the end.
Yeah, no, absolutely. And I can see like
Yeah,
how I can envision the football in my head right now, even though I haven't seen the chart. But
yeah,
essentially, it's, you go through applicant tracking, and then you sit probably in 3 or 4 different tech stacks, right? And
yes,
and then you kind of go to the offboarding process, right? So
correct.
and you're kind of getting passed along like a football.
Yeah.
So yeah, so I could see HRS, e-learning, content management systems, all those things. Did you ever go into billing and payroll?
No, no, that
Yeah,
was
I mean that was already a well solutioned kind of area.
exactly. Plus, it was a more administrative. Our focus was on talent management, on essentially finding people for the right skills, matching them with the right job, and making sure we evolve their skills. The area of payments and benefits was always considered by us, at least, as a um, partner business, because their focus was on administering the payments and the uh, anything administrative about the client, the employee who was their client at the time, but not it wasn't touching on their talents and skills and fit to the job they're in. So we focus on talent management.
Got it. Okay, interesting, interesting. And so when you sold that company, and what did you tell me about the sale, and then tell me about when you started TrenData? Love to hear a little bit more about that.
Well, it is really a story there, because um, in 2007, David, HRsmart was doing so well that Deloitte put us on their Tech 50 list. The Deloitte Tech 50. I don't know if they still do it today. I should check. But at the time, it was Deloitte's fastest growing technology companies, I believe, globally. And we made it that year to their list as number 36 as far as growth. Here in the Texas area, there is something called Tech Titans. That's a competition similar to the Deloitte 50, but it's local to North Texas. We were the fastest growing technology company in Texas for 5 years in a row before 2007. And so we decided in 2007 that it was time for us to look at um, raising some pre-IPO funding and essentially looking at potential exit. Um, Now, one thing to mention is as of that date, as of 2007, the company had raised less than $1 million total in funding over its 7 years in business. Some of our competitors that came after us, such as Success Factors, for example, by then had raised tens of millions of dollars. I believe the number for the Success Factor may have been around 80 million by then. And the reason we didn't have a lot of money is because we couldn't, being a software company in North Texas, made a lot of investors wary about investing in us. And there is a reason for that story I'll share with you, but you being running an investment firm, you'll appreciate. I hired an investment banking firm, one of the best in the market at the time, and we told them, please help us raise our pre-IPO funding. Um, they started working on it. As you know, normally this process may take 90 to 120 days. After 6 months, they had not raised any money, and that was September of 2008. I had a meeting with them. I said, listen, guys, what's going on here? You know, that's 6 months later now, and we don't have, and we had met with probably by then 20, 25 different investment groups. Their answer to me at the time was, are you willing to move to Silicon Valley? Because if you do, I will have at least 10 investors lining up to invest in you. But in North Texas, nobody wants to take that risk. And at the time, I was cocky enough to say, you know what? I have gotten to where I was with $1 million. If nobody is going to invest in us, we'll continue on our own. I had not realized what's going to happen 3 months down the road in 2008. 2008 financial meltdown happens. We are essentially a SaaS company growing over 50% every year. We were funding everything through our new sales. And when sales slowed down, we lost essentially our funding. The rocket that we're on crashed back to the ground. And now we had a soft landing because I had offices in 4 countries. I was able to keep running the business at low cost, and we survived and rebuilt the company and had a very nice exit in 2015. But the success factors, and I use them as an example because they were essentially almost uh, by that time have very similar products, very similar markets. We were ahead of them in 2007 in every way except funding. In 2008, they had raised $400 million in Silicon Valley. And so when the financial meltdown happened, as you can imagine, they went telling every client and prospect that you don't want to do business with HRsmart. I mean, if I were their salesperson, that's what I would have done. So I don't blame them for that. That's normal. And clients that were wary of the situation, went with success factors. They picked up a lot of companies along the way that went belly up during that period. Fast forward to 2015, they exited for $3.7 billion. Now, we had a very good, successful exit. I'm not complaining, but it was sub 100 million. And so that was what drove me to create Hexa. And that is essentially, I wanted to try to get our entrepreneurs and innovators in North Texas create a mini ecosystem uh, similar to Silicon Valley. And obviously, I cannot do it by myself, but I was hoping I'll be a spark that will start a whole forest fire. And that was what Hexa is all about. It's an ecosystem designed to be a mini Silicon Valley for the innovators here.
Yeah, no, that's great. I mean, $100 million, nothing to sneeze at. You know, you dealt with some dirty pool, right? Yeah, I mean, things happen, right?
Yeah.
And you know, it's amazing. Like I was just thinking about today. I mean, I've been hearing just so many things that can go wrong in a company,
Mhm.
and you know, it's amazing to me. Market conditions, your capital stack, taking too much money, not taking enough money. You know,
Yes,
like
yes, yes, yes.
it's just like it's a roulette. No matter how smart you are, no matter how,
Correct.
you know, how great your company is, how great your product is, you can still lose
That's right. That's right.
or not win as much.
Or not win as much. Correct. Correct.
Right. Right. Exactly. I mean, if you're making a great business, if you're making a business that has great fundamentals, like HRsmart was, you can still have a crash. You could have a soft landing amidst any type of crisis. But
Yeah.
you know, it's super hard to compete with companies that you know, are venture backed, that are burning tons of money at bad economics and are playing that hot potato game, right? Where they're just, you know, giving that stuff away.
That's right.
Okay, so Hexa, you started Hexa, so I know we kind of breached on it. So tell me a little bit about, you know, how many portfolio companies that you have, how much capital is being deployed, you know, what those companies look like, et cetera.
Sure. Let me, David, start by defining, what is Hexa as an ecosystem, because it's not just one incubator accelerator. In fact, our incubator accelerator is one company out of six that is in the ecosystem. We created six different companies. In fact, we created some and acquired some, but the ecosystem has one company that's an incubator accelerator, has one software development company that could help any of our companies that need help with their technology or team building. We have a marketing company, we have a sales development company, we have a global support company, as well as innovation centers where people could sit together and collaborate and work together. Now, that's kind of the ecosystem, and each one of them is operating as a separate, independent company owned by different shareholders and run by different CEOs, with each CEO goal to maximize the value of their own business. However, they all operate under that one um, goal in mind, which is essentially, if Hexa Ventures incubates a company, then every one of these companies will be willing to offer their services at cost. They will not charge any margins or profit for any of the incubated companies. So that's kind of the model we built. Over the years, we have invested, Hexa Ventures have incubated and invested in almost 40 companies. And the model really is three levels of investment. The first level is simple incubator model, where all we do is we help them with their advisory, mentoring, help them with the pitch deck, introduce them to investors, help them form their board, their advisors, etc. And for that, we take a small equity. The level two investment is where we invest in some of the services that may get from the ecosystem. So if they want to hire programmers through TechGenies, Hexa Ventures may cover half of that cost on their behalf as an investment. And level three is where we put in cash in these companies. One thing to mention is Hexa has never created a fund, so have been personally the only limited partner. So I kept investing in the company, in the incubator, until essentially my fund ran out, which happened when the market went south about 7 months ago. But until then, from those 40 companies, we had put cash investment in 12. We have made services investment in about 22 of the 40, and the others were simple incubated companies. A lot of these companies turned out to be HR technology companies, simply because that's where we had a lot of connections. And as a result, we have created an additional benefit to these startups in that we created a whole go-to-market support strategy for them that goes beyond just helping them sell on their own. So now we have a whole go-to-market network that resells for our portfolio companies if they're HR technology companies. So that's kind of the where we are today. Um, of the 40, we had already 4 successful exits, and we had 1 failure, unfortunately. The failure we couldn't help keep in business by any means because they were a technology company that was creating an application for people to share information when they go to sports events or concerts or things like that. And they launched their company December of 2019. And as you know, March of 2020, COVID shut down any events. And we kept trying to keep them going because they were just a startup. They didn't have a lot of money. So we gave them a lot of free services to stay in business, hoping that COVID would go away. But after 2 years, and as you know, it took over 2 years for events to start coming back, they just couldn't hold on. So that's the only failure we have out of 40 companies. And as you know, we're very proud of that because if you look at the average number of startups that succeed in the market in general, we're talking less than 10% succeed. In our case, we lost 1 out of 40, so we have a 97% success rate, something like that. So we're proud of that.
That's fantastic. So when you're saying that you are incubating them, the founders are coming in with an idea, you're giving them a little bit of seed capital, and you're providing some services and some support and getting them to get some funding.
Correct.
Because I've looked at a lot of your product, and there's some really great companies in your portfolio.
Yeah. I mean, one of our exits, that's a case study I'll share with you, David. It's a company that we helped build of all technologies. We helped them build a recruiting technology that is AI driven. And that company was able to exit in its second year of operation with less than $1 million in revenue. They were able to exit for $75 million. And so that's kind of,
Great
for
outcome.
me, that is the star of our incubation and acceleration work. The other 3 of the 4 that we exited were all successful. The one that's kind of very successful, but not as well as this one, exited for 35 multiples of revenues, although it was still like 3 years old. And so we've got very good successful exits, and that's what's helping us fund obviously newer companies. Otherwise, I tell everybody, I wish I was Bill Gates or Warren Buffett. I could help many more companies than I can. Or one day I'm hopeful that a fund will partner with Hexa and kind of act as the investor in what we do. But we have not done that today, not because we don't want to, but because we never had that opportunity.
Yeah, until you feel rich again and the market goes up.
Yeah, exactly.
It'll come back.
All investors tell me that.
Yeah, you'll be writing checks again. You just gotta get past this little stutter step.
Yeah.
It's amazing, like how I don't care, how savvy of an investor anybody is. Investing is an emotional game, and when you look at your paper statements, it gets scary, That's why I just try to not look at it when stuff isn't going good. And everyone thinks that, hey, even though, those 6 months in 2021 when I was worth X amount of money, right? Like that's what I should be, and that's what I need to be back before I feel comfortable again. When in reality, like that was just a blip, right? Like we were never supposed to be that rich.
And it was a number on a paper, that we forget that. It
was a number on a paper. Yeah, it was. And like none of us were selling, So, it's an emotional game. So, I've seen a lot of HR technology today, and I think I think it's being purchased because there's a lot of HR problems in the world right now,
Yes.
specifically around the Great Resignation, employee retention, recruiting, finding the right people, etc. So within all this noise, Mon, tell me, where is there real opportunity in HR tech? Which companies are going to stand the test of time? Because I look at HR tech kind of becoming like the next marketing or sales tech. It's like there's just so many tools out there, and so where do you feel like the real opportunity is, and where is there growth in this market?
Well, the evolution, I'm not going to mention companies or even technologies. I'm going to talk about it from um, a talent manager perspective. The smart providers will recognize that if I am running the talent of my company, I'm the chief human resources officer or whatever the title is, the VP of HR. My goal is fairly simple. I want to maximize the retention of my employees, their productivity, and how committed they are to my company. And once somebody understands that, it essentially solutions that will make those things happen will be the ones that will essentially stand the test of time and will be the ones that are needed the most. Now, the answer to this question is not as easy, and you and I know very well. It all depends on the people, and the people change with time. So what worked 20 years ago didn't work 10 years ago, doesn't work today, because the kinds of people and the environment they're living in and how they're working changes. That impacts people productivity, expectations, motivations, availability for alternatives, their retention or commitment to their client, and so on. So once a solution starts thinking about it like this from a global perspective and becomes a people management solution. When we started HRsmart, we were the first to say it's not about human resources information system. That's what it used to be, the payroll and benefits. At the time, we coined the talent management. You have to manage the skills of your people and hire the right people and put them in the right skills. That was 20 years ago. Now it's about people. You have to look at your company, your employees, not just when they're employees. After they leave you, where do they go? Stay network with them. Have them stay network with your company. Start working with people that could join your company down the road, because you want to start whether training people or just attracting people, things like internships, things like relationship with schools, things like having some free training programs. I mean, all this takes whatever the HR executive has to do beyond their employees. Now they're looking at the whole ecosystem of talent that could join them or talent that left them. That's, I think, where the HR is evolving to today. Unfortunately, retention rates are very low. People are moving jobs very quickly. That is a problem for most companies. But if the company is agile enough to start thinking ahead of time, they become the attractant of these people that are leaving their jobs versus losing them. So I know it's a long answer. It doesn't touch upon what technologies there are. Obviously, if I do, I'll be promoting our portfolio companies. But
Do it, do it, Mom. Pump your book. Everyone else does.
no. Now I would be happy to talk to anybody independently and give them ideas. But I hope I was able to clarify. It's not just about managing your employee talent now. It's managing the people that before they join you and after they leave you.
Yeah, I think that's smart.
Yeah.
And I just think like when it comes to, it's kind of like healthcare in a way that I think about employee interaction, engagement, retention, productivity. I'm not entirely sure that like automating stuff with software is like the first principle of it. It almost needs to be like there's a behavioral change. Like how do you become like not a shitty boss anymore? How how do you like care about people in
Yeah.
a way that wants people to stay? Because you can't be a shitty boss. It's just too competitive out there.
Yeah.
Whether you
Agree.
work for Wendy's or you work for Google, like you just have to be an empathetic person. You're gonna have to want to help people, and if you want to have anybody. But
Yeah.
yeah, it's super interesting. I'm really curious to see where this space goes.
Yeah.
Uh,
Leading
Mon,
versus
couple of
managing.
exactly,
Yeah. Yeah.
exactly.
Yeah.
So I want to give you a couple canned questions that we give all of our
Sure.
guests. What is the best piece of business advice you've ever gotten?
Um, Early when I started working in this country back in '84, I worked for a gentleman called Mark Feichner, who was a vice president of um, business and corporate development for GTE, which is now Verizon. He became my mentor. That's why I called myself Mark for the last 40 years. I mean, yeah, and Mark gave me the advice that I've lived with since then, and I think I'm successful because of that. And he always told me, always think win-win. When you're talking to someone about anything, in addition to think how you can be a winner from whatever it is you're talking to them about, in your mind you should be thinking about what makes them win out of this, and always approach them with that win-win. Don't ever waste your time on something that you think you're going to win and they're going to lose, because even if you pull it off, it's not going to be a win for you. Something is going to down the road happen that will turn it sour. So I practiced that all my life, and it turned out to be a very, very good, valid advice.
I like that. What's your favorite book?
Uh, Email.
Yeah,
I, now I
Gmail.
um, I haven't read books in a long time, unfortunately, the lack of time. But when I did, my favorite book was The Prophet by Khalil Gibran, who is a fellow Lebanese American that I'm sure you know who he is, lived in Boston and wrote beautiful books. The Prophet is the most famous one for him. And growing up, but not only did I read it maybe 20 times, but I really followed a lot of what he said there. So,
Awesome.
yeah,
Awesome.
yeah.
Mon, thank you so much for coming on. This is the Capital Stack, where you can listen to operators, founders, investors about all things value creation and startups. Please subscribe, leave a comment, share with friends. We are on all platforms: Spotify, YouTube, and iTunes. And we will drop an episode next week. Thanks. Bye-bye.